Hi.
Great. So I'm Andrea Reynolds, contrary to my name on the screen, and I'm founder and CEO of swoopfunding.com. Prior to setting up Swoop Funding, I was a chartered accountant with KPMG, then was a corporate finance advisor for 15 years in the small and medium business space, and decided to automate a lot of the work that we as business owners do when we go to seek out what we're eligible for in terms of finance across loans, grants, looking for investors. And just a little bit about the business. We launched in early 2018. We won 2 big banking industry competitions, one around open banking. So now we've been able to build some technology to help you analyze your bank account spending, and we match that to savings. What we're trying to do is improve everyone's bottom line and match them to the funds that they're eligible for, and then get them through that process much faster. In relation to what we're here to talk about this evening, which is around what are the COVID-19 government relief funds, what do CBILS mean? This is something that we're dealing with every single day. We talk to all of the accredited lenders every day. We understand the state of readiness of them all, and what the real life on the ground issues are, and what you need to do to get yourself ready to be able to successfully get some CBIL funding. So that's just a bit of brief background on myself. Is there anyone else? Gary, do you want to introduce, or shall I continue?
Just a quickie, yes. So I am Gary at EFM. So we provide financial management support to SMEs through on-demand, on-tap financial directors, financial controllers. And like Andrea, we are seeing what's going on the ground from a FD's view on life and some of our clients, which I'm happy to share. And we work quite a bit with Swoop and others to help clients find funding and grants. So I think between us, hopefully, we can give you some real life stories and practical hints and tips on what to do today.
Yeah, super. So I think I might just give a quick whistle-stop tour of the reliefs that are out there and what's live, what isn't, and then mainly focus on CBILS, because that's probably the one that needs unwrapping a bit more. It was a great big announcement, eye-watering number of 300 billion, but the reality of that, how does it get into your bank account? So I'll start with CBILS. And so CBILS was announced by the government, which they announced the sum and then said, we're going to give accreditation to 40 lenders in the market. And they chose those 40 lenders based on an older scheme called the Enterprise Finance Guarantee Scheme. I'm sure many of you have heard of it. It's been around for decades. And so they've chosen those 40 lenders. That, of course, includes the typical traditional banks. And then there are other regional lenders. The main points of it are, firstly, you as a business, what do you need to provide to the bank and what do you need to prove? The first thing you need is your management accounts up to December 2019. Those accounts need to show profit. They will be looking at that number in terms of assessing your affordability and debt service coverage ratio. So they'll be taking that number and then they'll be looking at what amount are you trying to borrow, and they'll be dividing your annual payments into your profit to see what your coverage ratio is. That's the first thing. The majority of them that we're speaking to when it comes to the term loan offer, a couple of things on it. One, there are 4 different products. The first one is a term loan that you can access with a 6-year repayment plan, up to 6 years. There's no early repayment charges. That's the first thing. The second one is they've also given accreditation to a number of invoice finance providers. So if you've got invoices that you would normally maybe get some finance on, they will look at either giving you an entire CBIL amount or giving you some of it in their normal rates and then topping it up where you wouldn't have met the eligibility criteria with the CBIL. The third one is that you can get an overdraft via CBIL. So where maybe your bank wasn't comfortable in giving you an overdraft before, they may be able to do it through CBIL. And the last one is asset finance providers. Again, if they're stretching on getting you to their credit committee comfortable levels, they can use CBIL. So that's the different forms that are out there. If it's an overdraft or invoice finance, it has to be repaid within 3 years. You don't pay any arrangement fees, and you don't pay any interest on the loan for the first 12 months. I've been asked what happens after the 12 months, and the answers I'm getting from the lenders at the moment is it'll depend on each case and the risk profile of each case. The only thing I will say is I don't think that they can go into ridiculous interest rates and take advantage of this situation, because the regulators have come down hard on them and said that they're watching them in terms of their distribution of this facility, and that they're not allowed to take advantage of the situation. So we're not expecting ridiculous interest rates to be coming in, but it'll be each case as we go. The other things to mention are the security aspect. A lot of people are worried about the personal guarantee side of it. Initially, when the 4 major banks launched this, they said, we're going to take personal guarantee. There was so much pressure from the regulator and government and just general outrage that they've now stepped back a bit and said, anything up to £250,000, we will not look to take a personal guarantee on. I will talk a little bit about this guarantee point and actually what is the point of a CBIL. The point is that the government says that they will guarantee the loan up to 80% of the value of the loan. So when it comes to looking at the directors of the business and looking for security, the first thing to know is that they can never take your principal residence, your home, as security, ever. Secondly, we've now heard that they won't take any personal guarantee up to the 250,000. But if you're looking for a number above that amount, they still have the option of looking for a personal guarantee that does not include your principal residence. The point of the scheme is usually for entrepreneurs who've kind of invested everything into their business. They have their principal residence and that's about it. And so therefore that's where the government steps in. So just to be mindful of, they may still look for other assets, a charge over your business or other assets you may have as a director before they go looking to the government to get their funds recovered in the event of a default. Just general things in terms of eligibility and what information you have to have available to give to the lender to make a decision. As I said, your management accounts up to December 2019. The next thing you need to do is a forecast, in particular a cash flow forecast for the next 12 months. And you need to show that that forecast has adjusted for all of the other COVID-19 reliefs that the government have announced in this forecast. So anything in relation to business rates relief, if they're applicable to you, anything in relation to furlough payments that are applicable to your business if you're temporarily laying people off, anything in relation to making sure that you've included your VAT deferral payment. So government announced that you do not have to make this quarter's VAT payment, and you should be receiving a letter from HMRC that says you can defer this up to the 5th of April 2021. You might also need to defer your PAYE NI payments, and while they haven't talked about that explicitly, they have said if you need time to pay on any other HMRC bills like corporation tax or PAYE, that you can phone a number, we have it, happy to share it with anyone who needs it, and you can discuss time to pay. So deferring any of these types of payments or creating a different payment schedule are the things that they're looking for you to do. The other things they want you to show in this forecast are maybe you've gone and negotiated with your suppliers, maybe you've got some debtors who can pay you better terms. They're looking for you to have explored every opportunity out there to improve your cash flow over and above going for this CBIL. So that cash flow forecast has to show those adjustments. It also needs to show the impact of COVID-19 on your sales or your payment terms. So you need to set out your new assumptions, whether it's you've completely closed or your sales have dropped off or whatever it may be. You need to show that impact, and you have to accompany your cash flow forecast with a statement on that impact. So what they'll be looking at is what were your last year's accounts? What are this year's accounts? What was your cash flow looking like then? What's it looking like now? And you have to come up with assumptions like, how long do you think it will take your business to recover once all of this is over? So a lot of, plucking dates out of the sky, etc. But as long as there shows reasoning behind it, then that'll be acceptable. What they're looking for then is once you resume back to normal business, that you will be able to make your principal repayments and your interest repayments. So it's quite onerous on you as a business to get this information together. On Swoop, we integrate your accounting software and pull all of this analysis together for you so you can speed up ticking all of these boxes. Just in terms of the amount that you can go for, and just to give yourself some estimates in your own head, a number of the lenders are telling us that they're going to limit it to 2 years of your average wage bill. So whatever your annual salary bill is times 2, that's what they're looking at to be the general size of the loan that they're looking to give. As I say, it'll all come down to the affordability element based on your last year's profits. I've had a number of people come on the platform who are tech companies who are not profitable businesses by nature. Like ourselves, we invest a lot in our tech, and unfortunately the viability criteria around the CBILS is really restrictive and not suitable, particularly for tech companies. I'll just stop there just for a moment to see, maybe Gary, you might want to jump in terms of what you're seeing on the ground, and I'll fill you in on, actually before I do, Gary, I'll probably just give you a quick synopsis. We every day speak with all of the lenders. We started with 40, we're now down to 36, 34. 6 have already left the program. The ones that have it, your own bank may have, I'm sure has it, and you've probably gone on the business banking website page and you probably see this lovely piece on CBILS and we're open for applications. And when you actually go to go through the process, they'll say, bear with us, we've thousands of applications. Really what's going on with the lenders is a couple of things. One, they're all operating remotely. They are operating their core business, but they suddenly hear an announcement from government that they're going to be distributing billions of pounds worth of loans, and their customer service teams are actually outsourced to India. And those teams are no longer there, they're all in lockdown. So they don't even have the normal resources to field inquiries. Secondly, they are trying to assess the criteria around this, just as we are as business owners, and they're trying to build a product around that. They have to do all their AML preparations and then distribute the loans. So they're all trying to run as fast as they can to get their product ready. Some are more ready than others. Some are actually already lending. But we're seeing a very slow start to this. So don't be disheartened if you've tried to get off the ground with this scheme and you're finding a lot of resistance from your bank. It's just a case of they're running to catch up, I would say. But Gary, I'm sure you have some experience already from it.
Yeah, no, absolutely, Andrea, and yeah, that's a good point, really, because it's that sheer volume and some of that compliance stuff that suggests your best chance of getting one of these loans is to go to your own provider first. Where you have a banking history, you should already be pre-approved on their anti-money laundering system. You already have a history with them. And the word I'm hearing on the ground is you're probably going to get a preferential position compared to someone who's applying to the bank for the first time?
Again, the banks thought they had the AML figured out, but the new directive tells them that any new financial product over £1,500, they have to go and do completely new AML. So I think they're all backtracking now and going, oh no, we have to figure out AML on top of this. I would say, yes, your provider, your bank is your first port of call. Thereafter that, you are entitled to go and speak with all of the other providers. Some of them won't have as restrictive capital requirements as the big banks do. So don't be put off if one says no. We even had a case of a customer contacted us, and he didn't do anything. He got a phone call from RBS saying, oh, I think you're eligible for the CBIL loan. They took him through processes for like 45 minutes and then said, oh no, you're not eligible. So now he's like, no, I want one. And I didn't even ask them in the first place. So there's a lot of stories going around, but I would say they are beginning to gear up, and the market's beginning to gear up for this.
Yeah, I think a couple of other practical things on that as well is there has been what appears to be a tsunami of applications. So again, look, if you can hold off a few weeks, it lets some of that initial rush die down. But actually picking up the point that Andrea said, that the banks want to lend, but they will have to go through normal credit. So if you are not properly prepared, you haven't got the management accounts, you haven't got the forecast, you are giving them every reason to reject you. So give yourself the maximum chance possible to get a loan. The prep and the data is really key in making this evaluation. So buy yourself a bit of time, if you can, and then put the data in, and then you've got a better chance of dealing with it when the masses have been dealt with, but also you've got a better chance of getting through credit.
Yeah, and I would say we're actually building a dedicated area for COVID-19 applications, because a lot of the criteria are just emerging day by day for the different lenders. So I would say don't be overwhelmed by it. We're trying to narrow it down as much as possible. The other thing is there's a lot going on in the market at the moment. So we are expecting more announcements. They could be of a different nature. But essentially what's happening in the market at the moment is the wholesale market has disappeared. So where we had a normal alternative finance market where there were numerous products on the market, where right now you could just apply and within 48 hours you would have a funding decision. The government chose the more traditional route of CBILS first. The reaction of the entire industry and the market has been, are you crazy? We tried this in 2008 and it didn't work. Why are we doing the exact same thing again? So I think there's a lot of pressure on the Bank of England and the government to look at the wholesale market side of things, so that these guys can access the funding to be able to then distribute out. So I will not be surprised if we start seeing more announcements along that nature coming over the next couple of weeks, because the government know that it's a bomb ticking at the moment that they need to deal with. So I do feel there's a lot of lenders in the market who are on a hold status, as in they're just trying to offer payment holidays to their current portfolio of customers. But I do see that if we get this decision, if you hear about the Bank of England making decision, or the government, that's what that will relate to. I suppose just to mention that. You might already have an enterprise finance guarantee scheme loan with your bank or with one of the other providers. And if you do, they are talking about how you can refinance that into a CBIL. And that's a much cheaper option for you, because it removes the government premium that you are normally paying under the EFG scheme. So that's it on CBILS. Gary, is there anything I've missed out there? Anything obvious that you think?
Yeah, so a couple of things. One, bear in mind, guys, this is, you'll hear a lot, and Andrea sort of commented that, there's an 80% underwrite by the government, but you as a business owner are liable for 100% of the loan. You've got to bear that in mind, that, this is a safety net, but you as a director, you need to be capable and confident that you have a chance of repaying that loan. Otherwise, this is probably not the right product for you. So really think that through. A couple of things, and you might be able to answer these, Andrea, better than me, but a couple of things that have come up. I understand the loan has to be largely used for business in the UK. So where we've got a cross-section of companies here in Ireland and the UK, I think you have to demonstrate that it's for UK purposes and there'll be an equivalent product in Ireland.
Correct. Now, Ireland has a lot of different schemes going on, and usually they're easier to access. We're operating in Ireland as well as the UK, and I do know that when it comes to government interventions, apart from the British Business Bank are amazing, but in terms of getting the funds quickly into businesses' hands, the SBCI in Ireland has new loan schemes, and they're similar to the Brexit loan schemes that Irish companies on the line are probably aware of. Microfinance Ireland has new loans available as well. There's a finance focus grant in Ireland, but again, that comes through Enterprise Ireland. So I would say the places to look in Ireland are the obvious ones are the SBCI loans. They're the ones who are then giving you the ability to go and access the schemes in Ireland. Obviously in Ireland we also have the statutory pay relief as well. So they're the ones that are coming most to mind. It's funny because Irish companies were phoning saying, oh, the UK companies are so lucky with CBILS, and then I explained CBILS to them and they were like, oh, okay, maybe not so lucky after all. So yeah, so don't be, if you're an Irish company, there are other things out there as well. We're keeping track with Enterprise Ireland, SBCI, Microfinance Ireland. All the alternative guys are on the platform, and actually some of the alternative finance providers in Ireland, one of them in particular was very well funded before the crisis, so they're still able to lend, albeit smaller amounts and stronger lending criteria, but we're still pulling deals through even yesterday. So there are the obvious candidates in the market as well, the traditional asset finance guys. So again, that's another place to look at how you can raise finance over and above CBILS. Maybe there's an asset refinance that you can do. And so we're also looking at other, trying to be as creative as possible and looking at other products. So if you're a tech company or if you've got an R&D claim in with HMRC, they'd already slowed down because of Brexit. Their processing became pretty abysmal this year. It's going to even get worse now. So what used to be 6 weeks, forget it, when you submit your R&D claim, within 6 to 8 weeks, you'd have the refund in your account. It's now months. We're talking 6 to 9 months. So what has come out of that is we now have niche lenders who will lend against your R&D claim. So we have one company, we've literally got a £900,000 facility for it today because they had this huge R&D claim that they've been sitting waiting for, which they were comfortable with up until the crisis, and now we've had to unlock that for them. So there are other products and other methods out there to keep yourself going while waiting for the CBILS to unfold and become more prevalent.
Interesting practical point on that, sorry, I'm just saying that the other thing you can do as a business, if your year end is March or later, you can shorten your year end. So if there's nothing to stop you taking your year end now back to December and getting your claim in quicker. So you sort of shortcut the queue a little bit rather than waiting to the end of March and then waiting for your accountant to put the numbers together. Some real practical on the ground stuff that you can do to help that.
Mm-hmm. Yeah.
Sorry, Diane, you had a question.
Okay, no, that's right. I've got some questions here. Some of them are around VAT. So it's about sort of advising to stop the direct debit as well as not pay. But one of the questions is, should we stop the direct debit at the bank and on the HMRC site as well? So that might be one for Gary.
Yeah, my answer to that is you should only need to stop it with your bank. I think the advice has gone out that way because the HMRC is so swamped that they might not have the systems in play to properly stop the direct debit being collected.
Okay.
So as long as it's blocked at your bank, they shouldn't be able to take it out of your account.
Okay. The other one is the VAT deferral for VAT payable between March 2020 up to the end of June 2020, and might this extend?
So my understanding is it's for all payments due in April, May and June, i.e. March quarter onwards. The word on the ground is everyone seems to think it might get extended, but that isn't committed at the moment. So you have to work on the basis that it's a deferral that you then have to repay by 31st of March 2021. So picking up Andrea's point, you need to put that back into your cash flow. There's something that needs to be paid before March next year, as it stands as of today. Interesting thing, Diane, on that, just a slight tangent. On PAYE, there is no formal agreement to do similarly. However, it has been accepted that HMRC are agreeing time to pay arrangements on HMRC and PAYE. And the feedback I'm seeing on the ground is they're letting you call up and they're basically agreeing to April, May, June deferrals, but they are not negotiating time to pay at the moment. They're pretty much saying, call us back in June and then we'll do a deal with you.
Yeah. And they're also, again, on the ground, but they have said this, is that they won't be looking at interest payments or penalties on those late payments. So those are the first places I would look on your cash flow. Second thing to mention is looking at your basic overheads. Again, this is something we do on the platform to highlight to businesses how much we are being overcharged. Like, I don't think anyone realizes, but on basic things like utilities, at the moment we have a window of energy prices being at their best. And for business energy prices I'm talking about. So we have this window, and so if you are up for renewal, let us know, because you can lock in now. What's going to happen is over the next few months, because the economic outlook is so poor and we're going to go into recession, credit ratings are going to be hit, and what's going to happen is prices will start to rise in terms of the price that you can lock in at because of deterioration in credit rating. So now is if you are in that place of potentially coming up to a renewal date on things like your utilities, big savings to be made there on basic bottom line cash flow going out every month. Other things that I would mention to you are insurance. I speak to insurers every day. We've had speaking to insurance brokers. I was on a board committee today for an insurance company. They're anticipating businesses calling them up and looking for payment holidays or maybe a moratorium on their premium payments. So again, that's another place to look in terms of if you're not utilizing or in need of your insurance right now or looking for a moratorium, speak to your insurance providers. The next one is if you are continuing to have to make payments, if you're making any international payments from your bank, stop making international payments from your bank. The market spread and the charges that they're creating, on average, per £100,000 in euros, and if you're making 2 or 3 international payments a month, we're saving businesses over £7,000 a year on that. And that's just by switching them into one of our providers like a TransferWise or TransferMate. There's huge savings to be made on your bottom line. Most of the time we never have the time to look at these things because we're all running around. Now we're sitting at home, and maybe the thing we're doing most is looking at our finances. So there's things like that you can do, basic decisions you can make now that will improve the bottom line, not just for the cash flow perspective, but from the affordability metrics that these guys are looking at to actually give you some lending. So there's a bunch of reasons why looking at those numbers is important.
There's a couple other things on that as well that we're seeing is you look down your bank statement or your credit card for all those little tech apps and DDs and £10, £15, just switch them off if you don't need them. You know, they'll all mount up. And the other one we're seeing a lot is there's a lot of it's very little movement by landlords generally at the moment in this market in the commercial sector. Although we are seeing some landlords allowing quarterly payments to go to monthly payments, which could be helpful. We're also seeing some landlords not really accepting a deferral, but basically saying for the next 2 or 3 months, I'll use your deposit instead of you paying me, which might be quite helpful to give you a bit of relief. But they'll probably want that deposit back once things turn up. So again, that's one we're seeing a little bit with landlords that might be helpful for you.
Yeah.
Okay, one of the other questions here is from the point of view of the information that you provide and your wage bill being one of them, does this include subcontract invoices?
Yes.
Or is it PAY only?
No, it can include subcontractors as well.
Okay. Then we've got a question from Martin Mokler of Evans Mokler. Do Swoop deal with companies that turn over in excess of 45 mil that may apply for the CCFF facility?
Yes, I was about to say you won't get your CBILS, you'll get your CCFF. Yes, that's correct. Yes. Whichever schemes that each company is eligible for, as I say, we're working with all of the providers. So yes is the answer.
Okay, we've got one about loan provision and the personal guarantee. What about the non-4 big banks? Would their personal guarantees be different?
For the big banks?
Yeah.
No, as I said, they certainly won't be asking for one up to the 250,000. They will be looking for some form of guarantee above that number. And I suppose just to give people a reality of, I know they're going to run this exactly like they ran the EFG scheme, and generally they do a half-hearted attempt to see can they recover the funding, but since they can't go after principal residents, they default to the government recovery scheme. But it's still a personal guarantee, so it's important that everybody knows what that means. Yeah.
And Andrea, just a clarification on that. Yeah, so the big 4 banks hopefully will behave properly. Do you think the alternative lenders will take a different view on personal guarantees?
Alternative lenders have a completely different view of the world. There's so many of them that don't even ask for a personal guarantee. Even those that do ask really don't follow it up. They've priced it into their model, and so they've priced it in now. This is their first recession. We haven't had alternative finance lenders came out of 2008. This is their first time that their balance sheets are being hit. So I'm not sure will they change their ways, but up until now, we know from dealing with them, we've over 50 of them on our platform. Most of them say we don't take a personal guarantee because we couldn't be bothered going after it, because we know the main asset is the home and we're not going after that. And the rest of them say we take it, but truly we're not going after that. We've priced it in. And so that's why the thing with alternative finance is it's more expensive than your bank. You're never going to get a better rate than you'll get with your bank, but it's faster to get, and they've already priced in the default, so that they're not coming after you essentially.
Okay, any other questions? None that I've got on my list as far as I can see. Great.
Well, if anybody has any other questions, you can contact us at swoopfunding.com. You can register, you can chat to someone in the chat box or request a call back. We've a team of former bankers, underwriters, accountants, etc., that then combine with our technology to push these things through and get you answers. If there's nothing else that you want right now other than an answer on when to go, when to hold, etc., that's a service we offer. So yeah, if there's anything at all, just let us know.
Okay, well, thank you very much for that, Andrea. That was all very, very interesting. Just to let everybody know that We now have got a community hub, bittercommunity.org, where all of the videos will be held, including other resources that we're getting through from all of our different membership to help people to sort of navigate through this minefield of information. If there's anything else that you want to know from us, then just please ask. And we also have on the site the events coming up so that you can see what other Zoom meetings that we're having over the next few weeks. So hope you all found that interesting. I certainly did. Thank you for joining us. And we'll get the recording out as soon as we can.
Just to say, what we can do also is for anybody that's interested or that you have in your community, as soon as there's any movement or announcements or changes to criteria, etc., more than happy to keep sending updates to you that maybe you can share with the community. So we might have another couple of lenders fall out, we might have some join. There's 5 new applications gone in for lenders who will be a lot speedier than the current ones that have been listed. So anything that's going on, it's important for everyone to know we're on it every day. We've dedicated teams speaking to government, lenders, etc., and we'll be happy to share any updates with the community.
That's great. Well, what we'll do is we'll also make sure that we have a link to your website on the community hub, so people can access it from there. So I'll say that again, it's www.bittercommunity.org. Everything that we do, anything to do with COVID, will be on there. Yeah, okay, that's great. Thank you very much. I've got a message from Jeremy, and yes, I'll give you a call. Thank you for offering, whatever it is.
Have a good evening, everyone.
Thank you.
Bye. Thank you.
Bye.